Welcome back to another episode of Uncommon Wealth, the show where we dive into the mindsets, moves, and mechanics behind building generational wealth. Today's guest is R.A. Session II, a visionary biotech entrepreneur and the co-founder and CEO of Signify Bio, a Dallas-based company on the cutting edge of personalized medicine. With nearly 2 decades in the life sciences, R.A. has shaped the future of genetic medicine, from leading gene therapy giants like Avexis and BridgeBio to founding Taysha Gene Therapies and taking it public in just 6 months. One of the fastest IPOs in biotech history. We're going to talk about that. At Signify Bio, he now leads a team backed by the Gates Foundation, Danaher Ventures, Eli Lilly Company, and others, advancing the mRNA protein therapeutics through groundbreaking delivery platforms like SEND, SEND, and IPOs. From corporate leadership to translational science and capital strategy, RA's journey represents a rare blend of execution, vision, and legacy-minded innovations. RA,
Appreciate that.
let's start from the beginning. Can you share a little bit of your backstory and how this all come to life and what those early years look like for you, my man?
Sure. And first off, thank you, John, for having me on here again. I'm just immensely proud of all your success and what you've been able to do.
Thank you, brother.
You're a brother, and it's just been really nice to kind of see your journey as well. So, you know this, but for the audience, born and raised in Dallas, Texas, so just right up 45 from you, South Dallas to be exact, Oak Cliff, Texas. We're one of the rare guys that actually played soccer growing up in that neighborhood. Just like growing up down in Houston, everybody played football, but
Yeah.
we were fortunate to be able to excel at another form of football. Went on to college at UNC Charlotte, where I had the honor of playing alongside you and a number of great other guys that obviously are like family today. And to see that program grow and do what it did, was fortunate to have a brief pro career like that lasted probably like
Cup of
about a year and a
coffee.
half. Yeah, exactly. That lasted about a year and a half. Both in the outdoor side and then a little bit of indoor. And just like everybody else, man, here in the US, it's kind of like a recurring theme for people that played soccer back when we grew up playing. We didn't have these multi-million-dollar contracts. You get hurt and you decide to go get a real job. And that's basically
Yeah.
what happened to me.
Yeah.
I was in training camp with the Baltimore Blast, tore my ACL, and I just said, yeah, that's it. Went back home. Was fortunate to be able to get into grad school at the time. Went back home to Dallas. Got my MBA at Texas A&M Commerce. Did a joint program, which was a MBA, Master's of Science in quantitative finance there. So finished that degree up there and got recruited to go work in Johnson & Johnson. So never, I think, I don't even know if I had even been to New Jersey at the time, but knew where it was. But
Yeah.
I don't think I actually had been, but got recruited to go work in their MBA rotational program. And ultimately it was the best decision that I made because I found my passion. And that passion was, the intersection between business and science. And I was fortunate to be able to go work in pharmaceutical research and development there. I was in new product strategy, mergers and acquisitions, pricing, licensing, and just, from there, was really able to grow my career in life sciences. And I have to give a lot of credit to my parents, because when I was coming out of grad school, the only job offers I was getting was in banking and financial services. And I had did that a little bit before after I played soccer. I went to go work at a company called TIAA CREF, right?
Oh,
And
yeah.
so, yeah. So I was at CREF for about a year. I got my licenses. I really didn't like it, like, to be quite honest. Here's my thing, John, and I don't know if you have this problem, but with your clients, clients don't really like to listen much, right? And so
No, all my clients listen, Reggie. All of mine do.
So I didn't have that same experience, and I can honestly tell you, I bank at JP Morgan Private. Ashley Herbst, you could ask Ashley. I never listen. And so I'm kind of one of those. And I was like, I can't spend my life with people not listening to me. So
Yeah,
decided to, not make the transition back into banking, but all the jobs I was getting after grad school was in banking. And the only job I got that was actually kind of a product based job was Johnson and Johnson. And
that's cool.
I remember to this day, my dad had, a couple offers in front of me, and my dad goes, well, what are you thinking? And I said, I never lived in New Jersey, so really don't think I want to do that. I kind of want to stay close to home and, I'd rather be in Texas, either Dallas, Houston, Austin, whatever. And my dad just he goes, look, if you don't like it, just come home. And I never knew I had a backstop. This is like the first time in life. My dad's a pretty hard guy. Like, so I never knew, I'm like, really? I could just come home? And he's like, yeah, if you don't like it, just come home. And I honestly left there, never came home, man. I just fell in love with it and ultimately found my passion.
And how did that roll into, the first business that you built and then you
Sure.
exited from that? How did that lead into that?
Yeah. So honestly, it gave me the foundation of learning the business of life science, drug development, biotech, deal making, raising capital. So I spent 2 years in their rotational program at J&J. Then I moved on to another kind of large pharmaceutical company based in London called AstraZeneca. And in AstraZeneca, I was actually in the pricing group. But in the pricing group, basically all we did was MPVs and IRRs all day. Negotiation on, is it better to be on formulary here, not on formulary? Do a discount? What's the MPV? What's the deal, no deal calculations? And so you kind of pulling in, all the financial analysis that I learned, at my MBA and J&J, and then kind of taking it a step further. It really for me gave me the understanding of the business of biotech. I was at AstraZeneca for about a year and a half before I got recruited to my first venture-backed biotech. So first private biotech, and where it wasn't a public company. You're scratching and scrounging, trying to raise capital any way you can, venture capital, venture debt, grants, doing licensing deals, research collaborations. We were doing it any way we could. This was a company called PTC Therapeutics. Now PTC, they just got another drug approved, $4 billion company. In 2011, I was fortunate to be part of the team that helped take that company public. That was actually in 2013. And that was my first IPO, junior guy on the team, obviously, but the first time I actually got to see the sausage
Yeah,
getting
you were
getting
along for the ride. Yeah.
exactly, and just had some great mentors. Stu Peltz, who's the founder of that company, and he was the CEO up until about 2 years ago. So 20 years, ran that company, spun it out of his lab at Rutgers, ran it for 20 years. They just taught me the ropes. Same thing with another mentor that was there who was a CFO, Chip Baer. Chip, he just recently sold this company. He was the CEO of a company, a biotech called 270 Bio, and just learning from these guys. And I remember walking into that office, and I was clearly in a room I had no business being in. I mean, these guys, right? And I just remember Chip saying, "Hey, sit in the corner and don't say anything. Like, you don't need to say anything. I just want you to listen, soak it up and listen." And dude, that, I like to talk, so that was hard for me. But, but that's what I did, man. And honestly, they gave me that along with the, kind of what I learned at Big Pharma. You couple that with, learning how to raise capital any way you can, just trying to get to the next value inflection point, really gave me the confidence to then, go do it myself. I moved from there to another private biotech company called Reata Pharmaceuticals. I was probably employee number, I don't know, maybe 25 or so at Reata. This is in 2011, helped them raise about $1 billion while I was there. We did two of the biggest deals in pharmaceutical history. I worked for the CFO there and was kind of like the lead analyst for the CEO. We did two deals with Abbott at the time that really were transformational deals. Left that company, went back to PTC Therapeutics, helped take them public in 2013. Left PTC and went to another newly public company called Epexis as their head of corporate strategy and head of business development. And about 18 months from there, we sold the company for it was 8.7 billion, right? And now you're sitting, dude, I'm 38 years old, and you now have your first kind of major exit. I'm like, I have no idea what to do with what I have. Do I just retire? Do I, do I retire? Do I try to, replicate it and do it again? And you're at a little bit of a crossroads. And ultimately, I decided that I wasn't ready to kind of go out on my own. To be quite honest, I was actually totally against ever going out on my own. I just didn't think
Oh,
I had,
really?
yeah, what it took to do it. And went to go work for a couple of other private biotechs. Helped one or two of them go public. Bridge Bio is one of them, who's now like a $9 billion company. I went over to Bridge Bio as their chief business officer of the gene therapy group, and kind of helped them make the transition to public. And it was at Bridge Bio is where I had this conversation with my wife. Uh, so my wife is from Ethiopia. So, she's pretty straightforward. Like she's, and she's like, "You travel too much. I never see you, like you don't see your kid. Like what, like the next job you take, you can't travel." And I work in biotech. And I'm like, that's Boston, San Francisco. There's no real biotech in Dallas. And she's like, "Well, you make all this money for other people. Why can't you do it for yourself?" And honestly, sometimes you get forced into these decisions, right? And that is ultimate. I had never thought about ever starting my own company, but I actually sat with that and I said, you know what? I actually do kind of do this for other people. And the myth of starting a company, it's all a myth. Like, and it's a myth to keep people out, right? Like, what? You go get a lawyer to go incorporate it for you. You go get some technology, you either develop it or you license it in, and then you go raise capital. I mean, it's kind of that simple, but
But you
and
got to know.
but you got to know. And I didn't know,
Yeah.
but I at least had the contacts to pull me in.
Yeah.
And I was able to link up with this phenomenal scientist over at UT Southwestern. His name's Steve Gray. And we had just sold the company for about, like I told you, we just sold that company for close to 9 billion. I helped raise capital in the following year for a couple of other companies. So the space is really hot. This is in gene
Yeah.
therapy.
Yeah.
Steve has all these programs at UT Southwestern cranking, and all of a sudden, and they're ready to go, and he's having a hard time funding them, through grants or whatever. And I go to him and I'm like, "Steve, look, if we start a company, I can raise capital against this. I know I can." And I said, "But I need all your assets." Basically, he had 14 drug development programs at the time, something close to it. And I need all of them because I need a portfolio to do it. And I kid you not, we formed the company. 3 months later, we did a seed round for $30 million. And then 2 months later after that, and this is granted, this is all during COVID boom, right? So money was flowing. So in 2020, we closed the seed round in April. That was a $30 million round. Um, 2 months later, we closed the B round, which was a $96 million round. That round was led by Fidelity. And then a month after that, we flipped public. And that was $188 million. This will never happen ever again. This is like a blip in the matrix. But but
The anomaly.
this is such an anomaly. We grew I mean, I was the only employee for the first like 3 months. We got up to, I think, close to about 200 employees in about a year. So this is a tale of, the up and the down of
Yeah.
the sector, but also, dude, it's a for me, it was a cautionary tale of growing too fast, honestly. And, you know, um, uh, really just being a first time CEO, dude, you make some mistakes.
Yeah, you
And,
do.
I would say there's a lot of things I wish I could have done better that I'm certainly trying to do better in this next go around that we're doing right now with Signify. But we just said it. You don't know what you don't know, and dude, I didn't know, and I cut my teeth. And there's a lot of good things about what we did, but and the company still the company is about a $700 million market cap. We have a phase 3 program in the clinic. This is a program, dude, that I identified when we started the company that nobody wanted. And I saw it was just something in this data that I said, I think this thing could work. And, by the grace of God, it looks like it's working, and that's going to benefit some people. So,
That's
dude, yeah,
awesome.
yeah,
And
it's been a
so,
ride.
so Signify now, would you say it's operating at scale, Signify?
So Signify, so we're a new co-startup. We just closed our Series A round December 19th. This is a another company spun out of UT Southwestern. This is out of the Seward lab at UT Southwestern. So Dan Seward is the scientific founder of the company. Dan and I have been friends for years. And we partnered on one of his first startups, which is a company called Rico Therapeutics. In the early days, I kind of operated as his interim CEO. We helped raise the Series A, and we ended up raising $80 million Series A, led by this New York biotech hedge fund called OrbiMed, but brought in all these great investors. Subsequent to date, they've raised close to about 400 million. They've got 2 programs in the clinic. And he and I had always been looking for the next thing to do together. And this was something that he brought to me that he had uh, spun out of his lab, published on, and we decided to give it a go. So we closed the round in December. That was led by a local investor called Actium Group, Bill and Melinda Gates Strategic Investment Fund. They came in. Eli Lilly came in. Danaher Ventures, which is the strategic investment arm of Danaher Corporation, they came in. ACS Right Edge as well, which is American Cancer Society's venture arm. And for us, we're now kind of at that stage of translating this early science from what we would say rodents, so mice, all the way into non-human primates, so monkeys. Once you typically can get into monkeys and show that your technology is viable in monkeys, you got a really good opportunity for it to work in the humans. So
Oh, wow.
that's where we are right now. So we got the company funded. We hired a chief scientific officer, a VP of translational biology, a chief business officer. So we brought in some really great people. We're about 13 employees right now. We're dosing the first monkey later this month, or later in August. And we'll see if this thing works, man.
Well,
But
fingers crossed, man.
yeah.
Fingers crossed. So clearly you've proven to the audience and the viewers that you're uber successful.
Oh, thank
Um,
you.
always always knew you were gonna be uber successful. And for those of you that don't know, R.A. almost did it.
Reggie.
Reggie and I, we went to school together at UNC Charlotte, and we were both goalkeepers. We both played for the Texans. He played for the Dallas Texans. I played for the Houston Texans. Our history goes way back, even into junior, senior year in high school, playing
That's
against each
right.
other.
That's right.
Um, so, bro, what's one belief about wealth or success that's completely changed for you over the years?
Oh man, dude, it's such a blessing to get these lessons. And life, gives you the test first, right? And then you learn. But money will not make you happy. Wealth will not make you happy, because, dude, you could be sitting on, and personally sitting on a couple 100 million, and still trying to figure out, like, what is your real purpose in life. And I think finding real purpose is more important than the wealth that's kind of generated. Now, I think what happens is, if you do find your real purpose, that wealth kind of comes with it a lot of times, right?
Yeah,
When you're operating in that zone where you're happy to wake up every day, you're happy to go to work, you're excited about what you're doing, it's easy. It just becomes easy, and things just do. It's so funny when you're operating in that zone, and you've probably been there. The opportunities come to you. You're not even seeking
yeah,
them out. You're just like, but they're coming to
yeah.
you. But I think the myth of it is, if I just had a little bit more money, I would be a little bit happier, and that's not the case.
Well, it's that abundance and gratitude mindset, right? If
Yeah,
you're,
yeah,
you know, we're believers in God, so we
That's
call it
right.
God. Other people call it the universe. But when your frequency of gratitude and abundance
Yep.
is in line, it all comes at you, right?
That's right.
And when you're at a discord with that
Yeah,
frequency, and you've got like a scarcity mindset or
that's
fear
right.
or anxiety, it kind of repels the opportunities that come around you. But
Totally agree. Totally agree.
yeah, and for someone that has wealth, and the listeners have heard from other people that have wealth too, you're not the first person to say money doesn't bring you happiness,
Yeah,
right?
yeah.
It's time and flexibility, right?
Ooh,
That money can afford you time and
that's
flexibility,
right.
but the money itself isn't the thing that brings you happiness. In fact,
That's right.
the saying of more money, more problems exists for a reason as well,
Dude,
right?
I couldn't agree with you more. What I would say is, like I'm blessed to be able to kind of have seen that ride up and down, right? Where, dude, I got to the point to where you're it sounds ridiculous, but at the highest, you're worth a couple hundred million. But when you start to get down to 100 million, you start to feel like you're poor. And I'm like, what? Like, dude, I'm from Oakland. Like, what the fuck? Poor. And that's but it's what happens when you turn money into something that it's not supposed to be.
Yeah, it becomes the idol, and then and
And it
then
becomes the
what
idol.
happens, right? And then what happens is there is, I mean, 100 million, a million, whatever your number is,
Yeah,
like
yeah.
you find a number that you feel comfortable with,
Right.
and that becomes your new normal. And when you start to
Ah,
drop below that number, it's about getting back up to that.
that's
So
right.
there's a healthy aspect of it, and an unhealthy aspect of it. But
Sure.
dude, so what's one thing you've put in place to protect what you built,
Yeah.
whether
Yeah.
personally or business wise? What have you done to help some of the listeners understand what a guy like you've done?
No, absolutely. I think the first and the first thing is finding a really good financial planner, understanding what you're not good at. And what I'm really good at is starting biotech companies, identifying technology, spinning it out, raising capital against it, and operating it, to a point of inflection. And then, once something is scaled, 9 times out of 10, it's probably better off in somebody else's hands, right? And then I go look for the next thing. So really identifying a really good money manager for me. I
Mhm.
um I think I mentioned this before. I banked
JP
at
Morgan Private, yeah.
yeah, JP Morgan Private. Ashley Herbst, who's the head of Texas for JP Morgan, she was my personal banker for many years. And just someone that
By
I
the way,
can go
that's when you know you're a baller, is when you get the head of Texas to be your private money
to.
manager.
but here's it goes, serendipitous, right? Because she was just a junior banker when we started out, and it's
Yeah.
kind of funny to see her
Her
grow
rise
in what
too.
she's done.
Yeah.
Yeah, but I trust her, and I really do trust her to have my family, mine and my family's best interests at heart. So that's the first thing. What I also said is I took a pretty diversified approach to once I um once I monetize something, a business, or get a pretty good exit, I actually I try not to take risk with that money. I don't try to add risk on
Mhm.
top of risk. My job
Mhm.
itself is risky, right, dude? I work at venture
Yeah.
backed biotech. These things are up and down. And so my cash portfolio, or what I would say, the portfolio that is supposed to be here, my daughter's name is Heaven. So the portfolio that's here for Heaven and her kids, dude, it's pretty boring, honestly. Like it's pretty boring.
Yeah.
And,
Yeah.
and what I do is still, try to take risk with my everyday business, right? I'm still
Right.
identifying tech. I'm
You're
still
you,
doing this, right?
you're the stock, right?
That's
So
I never have heard that, but yeah, I'm the stock.
there
That's exactly
there's
right.
a book, and this was transformative in my thought process on how to help people preserve wealth, because it's about wealth preservation solutions. And so Dr. Moshe Milevsky from the University of Toronto, he wrote a book. It's probably a 20-year-old book now, but the title is Are You a Stock or Are You a Bond? And the concept was exactly what you just laid out. And you've done that. You and Ashley have done that.
Yeah,
You are a high growth, high flying stock. It's boom or
yeah,
bust. There's nothing in
that's right.
between,
That's exactly right.
right? And as a result of that, everything else in your life needs to be a bond portfolio,
That's
right?
exactly right.
Because when you wrap RA into that portfolio, you're the growth engine, and that's the wealth preservation side of it. And
That's
so
right.
you make a blended. So the flip side of that is also true. If somebody that's listening to this or their children or grandchildren, if they're in a steady paying job like a teacher or they're an engineer or they're, something where it's a set paycheck,
Yeah.
it could be a really good paycheck,
Yeah.
but a set paycheck amount every time. Well, they're a bond.
Yeah.
And
Yeah.
so their investments need to look like stocks at that point, right? To offset that.
Yeah.
So
Yeah.
you guys have done a great job on
Dude.
doing that without even knowing it.
Yeah. So I'll tell you, and it's more by feel, right? It's just like, we're in our mid 40s, 40, 46. What are you, 45 now? We're
45,
at
yeah.
that. Yeah. And so we got a couple good years left, right? And we got a
Yeah.
couple good
I
opportunities
hope
to
so.
keep, right? To keep taking chances, right? And we could take a couple more chances, but at some point is exactly what you said. At some point, I'm gonna probably turn into a bond, and then you start to let the money work for you a little bit
Yep.
more. And
That's
yeah,
exactly right. And
you,
then
you
you look
know,
at your
it,
time horizon, right? I mean,
that's right.
if you're by the way, I don't see you ever retiring. You're always going to do something. So I had a guy on here the other day. He was 73 years old, and he's
Oh,
like, "I'm not
geez,
stopping." And
you
he's
can't.
flipped and sold and flipped and sold. And I mean, he's you just 30 years from now, and he's not
That's awesome.
stopping. So I don't think you're ever going to stop. But that idea is true. Now, let me ask you this question: since you've been successful, some business owners view their company as the retirement plan. So they shove all their
Yeah,
money into it. I mean,
yeah,
you've had explosive growth in a very short period of time. Most business
yeah,
owners, it takes 10 years to really incubate a business
yeah.
before it's ready to be sold. And that's their retirement plan.
Sure,
But
sure.
others kind of diversify as it's generating dividends
Yeah.
and distributions. How do you think about that for yourself?
Yeah, so it's more the structure of the business I'm in, to be quite honest, right? Because, you know, um, biotech is a 10-year horizon before anything ever gets commercialized. So basically, what we're selling up front is the dream of the technology, right? This is what
Hmm.
the technology could do if it's successful. To be quite honest, you never really want to get to the point to where you're actually commercializing a drug. I never want to get to the point to where I'm actually commercializing a drug. And the reason because of that is now the market now the market is basically saying, okay, there's a sales expectation you got to hit. And once you hit that sales expectation, if you're not growing, you're dying. And if you're dying and you don't have another product coming behind it in short order, you're going to just see that stock price just continue to fall and
And that's
fall.
every quarter.
And
And that's
that's
every
every
quarter.
quarter. Dude,
Yep.
being a public company CEO, honestly, was the best experience and it was the worst experience ever. It
Mm.
taught me one clear lesson that I never ever want to be another public company CEO ever again because because you spend zero time on your business. What you spend the vast majority of your time is with analysts talking about earnings per share, projected growth for the next year, uh, um, answering a bunch of questions you really don't have the answer to, but you're just doing the best you can, getting people excited about the stock, and you're talking to investors, and you're just constantly selling. Meanwhile, the operational aspect of what you're doing is just kind of running in the background. And it becomes a little bit your what's the word I'm looking for? The actual purpose of what you're doing becomes a little skewed, to be quite honest. You're
Yeah,
actually
yeah.
now focused on keeping the stock price as high as you can versus in getting this drug to market. What we should have been
The
doing.
the business isn't about the business anymore.
That's
It's
exactly right.
about right? It's about
It,
the stock price.
it's about the stock price. So what? So for me is if we can get a drug to the point to where we've de-risked it, we know that the technology is working, we have a good idea that it's going to translate into the patients that we're looking to treat. 9 times out of 10, it's better served in a big pharma's hands because they do this, right? And when I'm talking about, the Eli Lilly's, the Pfizer's, the Merck's, the J&J's, AstraZeneca, those guys, they're really good at the infrastructure build out, the reimbursement side of it, the distribution side of it, all of that. Where and a lot of times they're good at innovating. But what they do most of the time is they buy innovation, and they buy innovation from these little small biotechs.
Yeah.
So our job is to raise enough capital, not too much, but raise enough capital to where you can prove this idea to get and de-risk it enough to where one of those big boys get excited
Comes and
about it
buys it.
and comes and buys it. That's the name of the game. It's all about acquisition.
That's the sweet
Again,
spot to be in.
that's the sweet spot. And so for us, it's can you live long enough with the capital that you raise without over diluting yourself in
Hmm.
order to when you do get acquired, if you're blessed enough to get acquired, you still got enough of the company, right, in your
To make
pocket,
it
right,
meaningful for you.
to where it can make it meaningful for you. That's exactly right. So that's kind of the name of the game.
I love it, man. So
Yeah.
the wealthy and the uber wealthy in this country have been using life insurance as a financial
Yeah.
tool for decades. You
Yeah.
know, that's the business that I'm in. I'm curious to know, without giving away personal information, but what have you
Sure.
done using permanent life insurance, either to
Sure.
create a legacy, put it in the trust, create
Uh-huh.
tax-free benefits for your family?
Uh-huh.
What have y'all done?
This is exactly, and I'm even embarrassed to say it, but probably up until the last 2 years, I hadn't had any life insurance other than the life insurance that I got through my company, right? Where
Uh-huh.
they'll give you term life. You could pay for it through your benefits, and you can get, call it two, three, four times your salary, right? And I just had never really paid attention to it. And I would probably say over the last year, I don't know, man, maybe it's just us getting older, a little bit more gray hair. I don't know, but you just start now having these thoughts that you're not invincible, right? And so you start to kind of think about it a little bit more. And and what was really key to me was the people around me that I actually looked up to and really thought a lot about from a wealth preservation perspective, all had huge amounts of life insurance. I mean, they just had like massive amounts of life insurance, and then they had all kinds. They had, a lot of them have term, right, where that has a really large death benefit. A lot of them have whole life, or they'll have some sort of hybrid, and ultimately, I just started buying at every opportunity I could. Just anytime anybody's selling life insurance, I buy it. I don't, dude, I just buy it. And so is, your point is, look, we're all going to pass away, right? With that,
Yeah.
that's how the good Lord set it up. So we're all going to pass away, and what is a way, honestly, to eat if you're not super wealthy? What's a way, honestly, to make that transition to give your next generation the opportunity to do something, honestly, that they may have not necessarily ever had the opportunity to do? And you look all over Highland Park, dude, and you just see it every day. Someone passes away, the grandkids, they got another 10 million in the bank. And they're just and not to say that's a joyous occasion or anything like that, but what are they able to do with that capital to actually now, maybe preserve that person's legacy or add to that person's legacy? And so, dude, I tell you, this is what I've been doing over the last 2 years, is just buying life insurance any way I can get it.
All right, so we will have a conversation offline about that. But
Yeah.
you know the Rockefellers, right? The family, the Rockefellers, and then the family, the Vanderbilts. And I did a YouTube video on this in the channel not too long ago. But what the Rockefellers did, they created generational wealth. And here's what, obviously John D. Rockefeller was a huge business magnate
Yeah.
and made billions of dollars um, in today's dollars, right? He made
Sure.
billions of,
Sure.
maybe even at that time, billions of dollars.
Hmm.
But the way they've kept the generational wealth going is because they set up the trusts, right? The generational trusts. And every time a family member comes into the trust, they put life insurance on each family member. And
Mm.
so when they die, it creates a waterfall of
Oh,
liquidity
wow.
down to the next generation. And
Yeah.
so they have family governance. They meet as a family, like a
Yeah.
board of directors, 3 times a year. They're not allowed to deviate from the family investment philosophy that's been built.
Wow.
Yeah.
But the life insurance proceeds provides the liquidity to pay the estate taxes so they don't have to divest any of the family assets.
Wow.
And then as the next generation becomes adults, guess what? They get life insurance. And then every generation waterfalls down to the next generation.
Yeah.
And that's how, there's 81 different billionaires in the
Jeez.
Rockefeller family today. It's also why the Vanderbilt family, the exact opposite, the only thing they have to their name is Vanderbilt. They have no
Vanderbilt.
other assets
Yeah.
to speak
Yeah.
of, right? Because they didn't do the life insurance. And so when I'm thinking about, for uber wealthy people that have,
Sure.
more money than what they know how to do with, it's that generational planning that comes into
Yeah.
play. So let me
Yeah.
ask you this question. How are you thinking about the next 10 to 20 years? Not just
Oh,
business,
dude.
but personally and financially.
Yeah, that is such a great question because that's been consuming me over the last, I would probably say 6 months. And I just shared with you, before we started the recording, that I'm going back to school. I'm going back to school to get a doctorate. I'll be down in your neck of the woods 3 times a year at University of Houston in their DBA program. And I'm going to get a doctorate, not necessarily because it's going to do anything for my career, because it's not. It's not going to add a dollar to me or any credibility or anything like that. But it will give me the opportunity, one, I think, to show kids that, to be quite honest, look like me, that this is something that is achievable, right? You
From
can,
Oak Cliff, no less.
yeah, from Oak Cliff, right? And so that's the first thing. The second thing, it allows me to now kind of pour into that next generation and teach. And that's actually where I want to go, is actually teach. Whether you become an adjunct professor, at a business school, or even teach at call it an entrepreneurship class at a high school level. But it gives me that level of what I would say access, and that's really what it opened the door to. So that's the first thing. You'll be proud of me. I finally incorporated a foundation, right? And this is actually recent. And I incorporated the foundation because I said, if too much is given, much is too much is given, much
Expected.
is expected. Thank you. And to be quite honest, that's an area where I haven't necessarily done a
Good for
lot,
you,
and
man.
I want to. And so
Yeah.
we just incorporated Session Impact about probably about three,
Oh,
four
that's
months
good
ago.
name.
And what we're going to be doing is actually doing a STEM program. So providing STEM education for underprivileged kids here in the Dallas area, and
That's
trying to
awesome, dude.
partner with local universities like UT Southwestern, UTD, University of North Texas. So PhD students to actually come into the inner city and actually teach STEM education. So we're trying to kind of get that going right now, because honestly, John, dude, I didn't even know I didn't even know what biotech was. Like, like I didn't even know it was a job. And I remember going to visit my parents one day, and I'm going to Oak Cliff, and I go to Oak Cliff a lot. I mean, I'm always over there. And I remember going up close. I was getting gas close to my old high school. And it's a tough area, right? But whatever. And I had a pretty nice car. And I'm getting gas, and this guy comes over to me, and this young kid comes over to me, and he goes, "What do you do?" He goes, like, "You play ball or something? Like what do you do?" And I'm like, "No, dude, I start biotech companies." And he's like, "What?" And he and I sat and had this long conversation about what that is, and what it was, and how I got started and all that. And I felt like, if I can, that was one conversation, one person. If you could do that at scale, you don't want to be the only one, right? And you
And,
should be more.
and you are going to do that at scale. I know you well
Uh,
enough to know that when you set your mind to it, there's no stopping it. It's going to happen.
no,
So
I appreciated that.
25 years from now,
Yeah.
your grandkids are watching this.
Yeah.
And
Yeah.
what's one lesson you want them to take away from your approach to wealth and legacy?
Yeah. Um, Outside of the box. Do something other people aren't doing. Go the opposite way, right? When the crowd's going left, you go right. Uh, you know, don't follow your passion. Like, I sacrifice so you can do anything in this world you want to do. And I say that about heaven. I was blessed. I have a wonderful little girl who loves God, who's good in school. She's a good athlete. And I ask her what she wants to do, and it changes, right? One day, she wants to be a ballerina. The next day, she wants to be a doctor. The next day, she wants to be something else. But it's so she can have that level of optionality. You and I, the way we grew up, our parents, our parents worked their butt off every day. You saw them work hard, man. My parents, my dad was at on the assembly line at General Motors. You saw it on them, right? My mom worked at the post office. I know your parents were blue collar as well. And, you know, they just wanted you to have the opportunity to do something different.
Yeah.
And you've done that, and I've done
And
that. And
not and
so,
not what they did. Right.
and not
Exactly.
what
A
they
better
did, and
life.
not have to
Yeah.
do it, right?
Yeah.
Not have to do it. And so, you know what? If she wants to go work on the assembly line at General Motors, God bless her, go do it. But you do that because that's where your passion is. It's
Dude.
not because you have to do it. And so that's what I'm hoping.
So
And I
one of
hope,
my
and John,
favorite
hopefully they didn't lose it all. That's the other thing.
well, you're not gonna let them lose it all because you're gonna wrap it all up in a trust where they
There
can't.
you go.
Rockefellers. We're doing the Rockefeller
There
thing.
you go.
What's as a wrap up question, and then we're gonna do a quick lightning round. But
Sure, sure.
one of my favorite wrap up questions is what's something you know now about
Yeah.
wealth that you wish you understood a decade ago?
Yeah. Yeah. Ah, man. Here's I kind of mentioned this early. Money doesn't necessarily bring happiness, but it allows you the access to do some of the things that you always wanted to do, to give to people that maybe you always wanted to give to. It's to have the experiences that you always wanted to have. And ultimately, money should not be hoarded. It should be fluid. It should be,
Mm,
and I'm so happy we're having this conversation. It should be passed along. Money is
hmm.
serious. It's a very serious thing, right? Like it is not a play type of, you don't play around with money,
Yeah, that's
but
not
it's,
Monopoly. Yeah.
yeah, it's not monopoly, but it is meant to be when you get it in your hand, it's supposed to be exponential. It's not supposed to be hoarded, and it's not supposed to go down. It's supposed to be a force multiplier. So I
Yeah.
was I was in an Uber
Ooh.
I was in an Uber actually last week, and I was having the best conversation with the Uber driver, and he goes, "Look, I never get mad when I'm driving these guys and they're talking about, they just made $1 million on this deal or 20 million on this deal." He goes, because those guys are conduits. Because how many people work for those guys? How many families are kind of feeding off of that? Or who's going to college from that are then going to go on to do something else that is then, so it's
What
supposed
a
to
great perspective.
right? It's
Yeah.
supposed to be a multiplier and not
A
hoarded. And
force
so
multiplier. I
a
love
force
that.
multiplier, exactly.
Wow.
So I think my perspective on, dude, I was just you just one, I never thought I would ever be wealthy, right? So that was kind of a shock too. But when I got it, I kind of wanted to just hold on to it, dude.
Yeah.
There was nothing that made me feel better was actually just looking at my bank account. I didn't buy anything. I'm wearing the same clothes every day, dude. I didn't have a new house or a car or anything. And this is all true. You can ask my wife. I didn't bought nothing new, right? And then at some point, it's just like you, this ain't it's not useful to anybody. And so now it's about how can I, to your point, if you're right, how can you be a force multiplier? How can you
That's
make this
awesome.
exponential? How can you make this blessing that you got? How does it reach places that maybe you don't even get a chance to go, but that money has the opportunity to go?
Man, we are a long way from ramen noodles and hamburger helper, aren't we?
Yeah, dude, from your mouth to God's ears, man.
Oof, long way. All right, so lightning round. Quick answers off the top of your head. Book that changed your life or your view on business or wealth.
Yep. Um, um, Ben Horowitz, The Hard Things About Hard Things. Dude, if this is not
Ooh,
a cautionary tale, dude, and I've lived it. I have absolutely lived it. This is the entrepreneurial journey of a guy who failed, and just one day, I don't think he was even trying, and he just became successful. And then it's
wow.
like, okay, I'm here now. What do I do? And his story's being written. That Andreessen Horowitz, A16Z, that guy's funded everybody. But that book for me, it was life changing.
All right, we're gonna check that one out.
Yeah.
Um, what's a daily habit that keeps you grounded or focused?
So just started now. Well, daily habit, and I can't say it's every day, but I do start off my day with reading a devotional, reading the Bible. I go to Oak Cliff Bible Fellowship here in Dallas. Tony Evans, the senior pastor, Jonathan Evans, the lead pastor, and they send out a daily men's devotional every morning, and I do start my day by reading that. Now, what's new, and you'll be proud of this, dude. I'm back coaching soccer. I hadn't touched a soccer ball in like, I don't know, 15 years.
What?
And yeah, I do. And I happened to see, you know Hassan. I happened to
Yeah.
see Hassan in Starbucks on my way to go get a haircut. And he's just like, Reggie, what are you doing? You got to come back to the club. And and he got me roped in for Dallas Cup. So I'm coaching the goalkeepers at
You're the goalkeeper coach.
I'm the goalkeeper coach at Dallas Texans. And here's the blessing behind that, John. I was at church maybe a week before that. And the choir was singing, and I'm listening to this woman who was the lead singer. I mean, she's just pouring her heart out for God. And I'm listening to this, and I say in myself, that is somebody using the gift that God gave them for the glory of the kingdom. And I said, I don't know what I'm doing. I don't know if I'm doing that. And I kind of asked God, can you help me? Dude, like a week later, I see Hassan, and now 3 days a week, I'm in front of like 50 kids that are all where you and I were. They're all in high school. They all think they're the best in the world. They're all trying to just, they're all trying to be the next, Ronaldinho or whoever,
Messy.
Vinny
Yeah.
Jr., right? Messi.
Yeah. Yeah.
And you're able to shape them. You really are able to shape, man, because what those coaches, I mean, they're like second fathers to us, right? And that's
Yeah.
how we viewed our coaches. And
Yeah.
it's funny now we're at that point. Dude, I had this great gift. You had this gift. So if you're not doing it, I'm gonna encourage you to do it. Dude, like just being out there with the kids is enough. And you start getting into it. What I tell you, the only thing I'm gonna tell you is just to stretch first. just, just stretch first, dude. We're not 19.
No, no, 19's a long way gone, man. Long way gone. Um, bro, RA, your story, man, it's a masterclass, dude. It's a
No,
masterclass
dude.
in
Thank
thinking and
you.
fearless execution. Dude, from athlete from Oak Cliff, Dallas, Texas, to just IPO, mega successful. Dude, so proud of you, man.
Thank
So
you,
proud of
dude.
you.
No, I
Your
appreciate it.
your ability to kind of navigate the science and the business space together, and then now the legacy that you're building for your family and future generations. Thank you for joining me on Uncommon Wealth, Reggie.
No,
Appreciate it.
dude. I love the
I,
platform, dude. I congratulations on everything, dude. And just as proud of you are of me, I am of you. And dude, this is just the beginning. So
yeah, yeah, absolutely. Let's dialogue off the air. But man, thank you for
awesome,
coming on.
awesome.
I appreciate it. Thank you.
Absolutely.